Hi guys, welcome to this video. We'll be discussing with you the pros and the cons of using stop loss and of using trailing stop and take profit. Right. You see, I mean, this trade it's about to close, I think, for my analysis. Right. This trade, I entered it and around here, right, it was a buy, right, and now when I entered this trade, I used a trailing stop, right? And this trailing stop, I put a custom for 5,000 points. All right. So what it means is that my profit would always be 5,000 points behind the profit. Right. For example, this market it has just started reversing now, but if you can see here that from this point, it got up to around. Okay, let me do it here so that the figures won't be hidden. Right. So the maximum profit that I ever got to was around here, which is the 5,296 points there. All right. Now the market has started reversing, and I think it will hit there from my analysis. Right. So what's my point? My point is a trailing stop goes with you. It carries you as far as the market will go. All right. You see, when I entered the market here, let me zoom in. When I entered the market here, I set my trailing stop at 5,000 points. All right. And what does that mean? That means that as long as the market continues, when the market first crossed the 5,000 and 5,000 mark in profit, right, then my trailing stop automatically started, and as it went up, when I had 6,000 points as profit, my trailing stop was now set on 1,000, and so on and so on. Now, as you can see, my profit, the trade is still going my way, and my trailing stop will keep on following the profit as up until a time when the market reverses and comes and it hits that trailing stop, and then the trade will be closed. But I'll be in profit in this trade. All right. So how best can you use a trailing stop? Use trailing stop when you believe the market can still go your way. Right. When you want to lock in a certain amount of profit, but you still want to let the market run to see if the market can give you more. That's when you use a trailing stop. All right. A trailing stop is different from a take profit. A take profit is a barrier that you put. Say, for example, if I had put my take profit at this level here, as soon as the market would have hit that, the trade would have been closed, and then I would have captured that profit, right? But now a trailing stock is dynamic. It will continue following the market, the profit, up until a time when the market comes back and hits on that point. Right. I'm saying, say here, right? If this market now, if the price would come back to hit my trailing stop here, that's when I would go out of the trade. Say if it is this, if the markets are good to me and these profits continue running, then my trailing stop will keep on following up until a time when the market reverses. So a trailing stop is dynamic. It's flexible. It moves with the market as long as using the guideline that you'd have set for it, any number of points or pips that you'd have set for it. But a take profit is a static line that once hit the trade will close, right? So the advantages for the trailing stop is that, one, it will continue following the market as far as it can go. All right, you don't limit yourself like you would do with the take profit. A take profit would limit you to an extent, right? Because once that level is hit, then you are stopped out of the trade. Although even if the trade can continue in your way for along in your direction for 5 more hours, you won't benefit because you'll be out of the trade. But the trailing stop, you can follow the market as far as it can go, right? So that is the advantage of a trailing stop. The disadvantages of a trailing stop: one, if you set it too close, say for example, if my trailing stop was 1,000 points, right? it will be too close and price fluctuates, right? Right now there's 23,000 points profit. If those 23, if this figure would come back to 22,000, then I would be stopped out. I would go out of the trade, right? Because this line will be much closer. The chance of it getting hit will be high, because price will fluctuate. In as much as the price will be going up, but there are times you need to fluctuate and come down a bit. So it will come down and hit and stop you out of the trade, and then continue in your way, but you won't profit, because you would have already been out of the trade, right? So if you set your stop loss too close to too close, say for example 500 points or maybe 1,000 points, you will likely be stopped out early, and you won't benefit as much as you can from the market, right? But then if you set it at a distance like this 5,000 points, you whatever amount of points you put in as your trailing stop level, you will risk those, you will lose those when if the trade closes when your trailing stop is hit. What do I mean? I mean, right now this trade is 23,000 points as profit. If the market would turn at this point, I won't be able to collect all these 23,000 points as profit, right? Or even this $11. I will collect 23,000 minus 5,000, which will be 18,000. So I have locked 18,000 points as profits here. Yes, and you can see here it's $10.34, right? You see here now, my profit is $10.34. This is what I've guaranteed right now. This $1 to this $1.50 or something, from $10.34 to $11.54. I am risking it, because I am risking it because if the market comes back, I have no control over that. But I've locked in, like it says here, I have logged in my $10.34 US dollar cents profit, right? So that is a con of the trailing stop. If you set it too far below, you are risking a lot more of your profit. So it's a fine line between setting it too close, where you can be stopped out. You see now, the profit has come back 22,000. If my trailing stop was 1,000 points, then I would have been stopped out of this trade now. So, but if the trade would continue, then I would already be out of the trade. So you need to set it at a optimum level, not too close, not too far away. And then you can also manually close your trade. Like when I think like this trade, for my analysis, I should be closing it now, because if you look at my trend line, let me show you my trend line. You see now, this line that I've drawn, you see it's a trend line. It's showing lower highs, right? You see the market is, I believe, right around this period here, which is almost where I am. The market should start going down now. So you can use a trailing stop in conjunction with your the trend line like this, and then you can for the purpose I would exit at this point if I wasn't making this video, but I just want you to see. You see now, this trend line is showing me that there's this resistance level, and it's going down, and right about now it has almost been reached. So the market should turn around right around that level and probably start going down. But I'll just let it run. All right. So these are the major differences between the trailing stop and take profit. I hope you understand the issues, the dynamics involved, how it works, its advantages and its disadvantages. So if this market would break this resistance and keep going, I'll still be there. My trailing stop will still keep on following. All right. So you need to know to be aware of this and incorporate it into your trading. Right. Unfortunately, you cannot put a manual trailing stop on the MT4 mobile, but you can only do it on the computer. And when you want to do it on the laptop, this is how you do. You come anywhere here. You right click. All right. When it comes, then you look for trailing stop. Right. Then you come to custom. You can put in any figure you want, 1,000 or 10,000 as it may be, right? So but be careful when you use it for currencies. Now currencies won't have this high number of points. For currencies, if you're using 0.01, these 5 points will be 5 cents. This will be 50 cents. So if you put it at 50 cents behind 50 points, it means you'll be risking 50 cents in profit for that trade. Right. I also want you to take note of something. If this trade, when I entered it, if this trade is risen to a profit of 5,050 points and then gone back, what would have happened is that my trailing stop would have been set 50 points above my entry level, right? But then if the market would have come back, I would have only profited 50 points from that trade instead of profiting the 5,000. That is the maximum I could have gotten from that trade. I hope that's clear, because this trailing stop will get into effect as soon as your level of points has been attained. If I had put 1,000 points as my trailing stop level, as soon as the trade is 1,001 points, my trailing stop will be a point above my entry. 1,050, it will be 50 points above. 2,000, it will be 1,000 points above my entry. And then when it goes back, I would capture that 1,000. You see now. So you see, the market is about retracing like I predicted. So I think I should be stopped out in the next 2-3 minutes or so. All right. So I hope you have understood this. All right, and now you can use it. Right. If you want now to put a manual take profit, like if using this analysis, I could have put in my take profit here from this graph, using this trend line. I could have set my take profit here, right? So what I would have done is I would have just entered this number here, this which would correspond with what I believe to be my resistance, and then what I would do is I'll come here, right click, right, then modify or delete order, all right, and here I would put my take profit, the figure that I would have gotten here. When I think the market would be reversing that figure, I would have taken it and then I would have inserted it here, and as soon as it would be hit, then out the order would close. So you see my profit is coming down now. I have logged in $10.34. So I think the market, I should be stopped out of this trade any second from now. You see now, but as you saw, the profit got up to a level of around $12 at some point, but I can't take that because of my trailing stop. You see now my profit, which had gotten to almost 26,000 to almost 25,000 profit, has now come back to around 20,000. So I think this trade I'll be stopped out any second from now. So I hope this video has made you understand the difference between a trailing stop and a take profit, and you can make informed decisions in your trading. So thank you. See you in the next video, and happy trading. Bye bye.